Hello everyone and welcome back to another episode of Coffee and Crypto. My name's Don. Hope you're all having a great day. I have yet again another juicy episode regarding the ETFs, which Deck had covered last week on Friday's session of Coffee and Crypto. There's a lot of talk in the market and there's a lot of hype, I guess, being added to the market. So I'm going to talk a little bit about that, give my opinion on it, and also cover off some other parts of the news. So, first things first, we shall look at the prices. Now, let me just bring this up here. There we go. So, top 10 in the market. Let's have a look, see where we're going. We obviously had the weekly close last night. And then we've seen not much price movement since then, and things are still looking, we're looking okay. That's probably the best way to put it. We're looking okay. So, first things first then, Bitcoin currently sitting at 26,400, Ethereum at $1,721, BNB at 243, and XRP down at 48 cents, Cardano 25 cents, Dogecoin at 0.06, Tron at 0.06, and then Solana at $15. So, it's quite funny to see the fact that Tron and Dogecoin are essentially the same price. Market cap is slightly higher on Dogecoin, even though Tron is supposed to be a legit project, I guess. I mean, I'm not a huge fan of Tron or its founder, but yeah, again, it's funny to see that Dogecoin is actually way above Tron. Anyway, that's the kind of prices at the moment. Like I said, not much movement the past 24 hours. Over the past week, we have seen a bit of movement both to the up and downside. Bitcoin's actually up still 2% on the weekly, but then Ethereum's down about 1% on the weekly. BNB surprisingly is up 7% on the week. That obviously got hit quite hard with the Binance news, but there has been a bit of kind of news back and forward since then, hence why the price has, I wouldn't say it's rocketed, but it definitely has gained some traction. So, market's looking okay. Like I said, we're holding in there and potentially going to be seeing some more price movements as the weeks continue, now that we've seen this ETF news come out. Like I said, Deck did cover bits of it on the Friday episode of Coffee and Crypto, and I'm going to talk a little bit more about it later on in today's video. But first things first, let's talk about two of my favourite things to talk about on Coffee and Crypto, it seems, Coinbase and the SEC. So, the Coinbase Coinbase blasts the SEC for no straight answers following the court order. Now, this isn't anything new, something that we've said for many, many months now at this point, if not years. But also Coinbase has said the exact same thing, where there is no straight answer from the SEC. I believe it's all a tactic, and I think most people are now starting to think the exact same thing. So, Coinbase has slammed the SEC for failing to answer questions asked in the US Court of Appeals as part of the ongoing legal battle with the regulator. Now, in a June 17th letter, which was, 2 days ago, filed in the court, lawyers for the crypto exchange accosted the SEC for continuing to dodge Coinbase's rulemaking petition, which calls the SEC to establish a regulatory framework for digital assets, and when ordered by the court to address the stark inconsistency between its litigating position and its actions and statements elsewhere, the SEC still offers no straight answers and instead repeats its talking points. So yeah, again, this isn't really news, I guess. It's nothing new. It's new because it's an additional point, but in terms of what's actually happening, it's nothing new. It's what the SEC does to everyone. Coinbase got it, Binance will get it, Ripple have had it for 2.5 years, so it's not anything new. Now, the letter that was the letter in response that was given to the SEC's June 13th submission, it was requesting an additional 120 days to reply. So I covered that last, I think it was on Thursday or Wednesday. The SEC typically have asked for another 120 days extension so that they can reply in 120 days time rather than replying like straight away. Even though they've already put it off for months and months and months, they're wanting another 120 days. So yeah. Coinbase have claimed that the SEC is reluctant to inform the court of updates on its decision, saying it bristles even at being ordered to update the court on its progress. Now, the firm claimed that the impacts of the SEC Signlands? Why did I say that so strange? Here we go again. It's Monday. I'm tired, clearly, and I just said silent. What did I say? Silence rather than silence. Perfect. There's the first mess up of today. Let's continue on. The joys of doing live streams. So, the lengthy delays and its enforcement actions continue to weigh on the crypto industry, and SEC Chair Gary Gensler continues to charge well down the path in the here we go. I feel like now, because I know that people are listening and I'm live and I'm having to think about reading some of these words, even though normally I wouldn't, I would just brush through them. Anyway, that's damaging to the US public company and the entire industry. And we've said it a lot, and I've said it a lot of times on Coffee and Crypto, that by the SEC and Gary Gensler in general, what they're doing is they're damaging the US fintech movement. They're making other countries want to kind of take over, i.e. China, and the US is not looking good for crypto in general. Now, that's not a good thing for, well, obviously crypto, but for the US, because big companies like Binance, Coinbase, Ripple, Gemini, like there's loads of massive blockchain and crypto companies based out of America who are now, as I've covered many times, are now moving elsewhere. So some are moving to Europe, some have moved to Dublin, now China. So the US are kind of doing themselves no favours by being so awkward in their responses to people. Well, people are literally asking for the simplest of things. Cool, we'll do what you want us to do, just tell us what you want us to do. And they can't even answer. They can't even answer a simple yes or no. So yeah, think about that. If anyone gets that, where I got that from, drop the comments below, yes or no. There was reasons behind that. So on June 17th then, Coinbase's chief legal officer Paul Grewal, again mentioned him many times because he's been tweeting, I mean, a bit of a tweet frenzy with the Coinbase and SEC stuff. He said in a series of tweets that it's unusual for the government to defy a direct question from a federal court. Now, obviously, I would agree with that because that's a factual piece of information, but at the same time, it might be he said it's unusual, but I feel like it's very usual. Like, I feel like it happens all the time. So I don't know how factual that actually is because they've done it for 2.5 years. Just go look at the Ripple case. There you go, point proven. Anyway, look, I could go on and on and on and on and on about this, but the moral of this story, without spending too much longer on it, is the SEC are avoiding once again, to give clear answers on the regulatory stuff that they keep suing everyone for. So they're happy to sue everyone for it, but they won't actually tell you why they're suing. No, sorry, they'll tell you why they're suing you, but they won't tell you how to fix it and how to properly not be sued in the future, type of thing. So yeah. Anyway, enough about the SEC and Coinbase, because yeah, there's more to crypto than being sued. Put it that way. Okay, so next article is quite an interesting one, actually, something that I've covered before about the ordinals on the Bitcoin network. Now, I saw this article this morning and I thought it was quite interesting because it's a different type of, well, obviously we know that NFTs are on kind of Ethereum networks, we kind of know that, but there's this thing here that's popped up saying, watch out ordinals, 30,000 Etherscriptions land on Ethereum. So, I want to cover this off because when I covered the ordinals off, I covered that off about a month or two ago, and it has kind of got a lot of traction since then. So, I want to kind of keep touching in on it and keep you up to date with kind of what's going on in the market. So, Ethereum users then have been given another way to create non-fungible tokens and other digital assets on the blockchain with the launch of a new protocol. So, it's dubbed Etherscriptions, is a node to the Bitcoin Ordinals protocol, where assets are known as inscriptions, so slightly different. Etherscriptions was developed by music website Genius.com co-founder Tom Lehman, who uses the synonym Middlemarch on Twitter. Lehman declared the project had a huge success in a series of tweets on June 17th and noted nearly 30,000 Etherscriptions had been created within the first 18 hours of the protocol going live. So you tend to find, again, you'll notice this as I bring new things to you, things get really, really popular and hyped, and they tend to blow up like this if they're a decent kind of platform or new part of crypto. So that makes sense that 30,000 get created in 18 hours. So according to Lehman, the Etherscriptions assets utilize Ethereum's call data, the data within a smart contract, to allow for a cheaper and more decentralized minting process compared to the conventional smart contract-based methods. Now, I think this is funny because this is typical new project, typical new part of a network where they always say it's cheaper and more decentralized and it's easier, and yeah, it's been like that for years and years and years. When Ripple and XRP were out, when other projects came out that are kind of similar, like Stellar Lumens comes out, it's the same as Ripple XRP, but it's quicker, it's cheaper, it's like you're always going to get that in crypto, and you'll learn that as your experience builds, that there's always going to be a bigger, better, cheaper, faster project that comes along, and everyone will think, is that a rival? Is it so much better? And 9 times out of 10 it's not. You're better just going with the original. For example, Bitcoin is like the Bitcoin. It's the crypto of all cryptos, but altcoins are alternative coins to Bitcoin. So it's like, yeah, they're a wee bit better in terms of speed and price, but realistically, like, you can't beat the GOAT. Same as when you get to these things, are these going to take over the Ethereum network for minting NFTs? Probably not, but they will get some traction because it will obviously speed up some things. But yeah, I feel like you do see this in crypto, like a new thing will happen, especially when the market's been so dead as it's been recently. You'll start to see things like this kind of popping up, and it keeps the hype going, and it keeps kind of crypto ticking over until the inevitable of the next bull run comes. So we need things like this. Anyway, users are currently limited to image-only inscriptions, but Lehman says the protocol will allow for different file types to be uploaded in the future. Currently, users are able to e-scribe any image as long as it's less than 96 kilobytes in size. And Lehman's debut project on the Etherscriptions protocol, dubbed Ethereum Punks, very creative name, witnessed a considerably positive response from the community, with all 10,000 assets being claimed near instantaneously. So yeah, again, if you're familiar with NFTs and whatnot, you'll know that CryptoPunks were obviously one of the biggest, most popular, and I guess they still kind of are, in the NFT space. And we've got, again, Ethereum Punks. So yeah, again, this whole punks thing came from CryptoPunks. You've seen a lot of them kind of grow arms and legs throughout the NFT hype. And yeah, look, like I said, I don't think this will be the future, but it's good to see that we are seeing a bit of progress and a bit of change and something different, and I'm sure people will still make money from it, and that's, I guess, the main point of it. Anyway, let's start getting into some of the ETF news, because there's 2 parts of ETF information I want to share. First one being Grayscale's Bitcoin Trust, which, again, if you've been in crypto a few years now, you'll know exactly what this is. It nears a 2023 high on the BlackRock ETF filing as buyers step up. Now, this is interesting. So GBTC, again, a few people in our Discord community actually have been mentioning this, but it has been quite popular in the past kind of 5 days, past week or so, because of the ETF news. So the premium heads down below minus 37%. Now, the Bitcoin market sentiment showed a modest improvement late last week as news emerged of the world's largest asset manager, BlackRock, had filed to launch a Bitcoin spot price exchange traded fund. Now, while still not allowed in the US, a spot ETF from a stalwart entity such as BlackRock should have a better chance of breaking the legal impasse, some say. In the meantime, however, signs of optimism beyond sentiment are becoming clearer, with GBTC long trading at a major discount to Bitcoin spot, which is on the way up. According to CoinGlass, the discount on a negative premium used to categorise GBTC share price is currently minus 36.6%. While still heavily discounted, the GBTC thus trades closer to zero than at almost any time of this year. On June 13th, for example, the discount was closer to minus 44%. So, if the BlackRock ETF does get approved, which I'm going to cover a full kind of breakdown on that, on why it could and why it potentially will get approved in a few minutes, so keep watching till I cover that. But it'll be a real winner here is going to be GBTC, so that's why again people are kind of buying up and thinking about investing in GBTC because of the kind of front running of the ETF that might kind of get approved. Now, it won't get approved until probably next year, but anyway, like I said, I'll get to that in just a sec. A partner at the venture capital firm Sinamihim, I think that's how you pronounce it, Ventures wrote in part of his Twitter commentary at the weekend, because BlackRock will show the path to conversion and GBTC's 40% plus discount will resolve on top of industry growth. Now, he said that they thought that BlackRock's offering has good odds of getting US regulatory approval. Very different structure than other efforts by Behemoth, who doesn't lose. 30 Act redeemable trust with redemptions, unlike GBTC, plus proposed rule change filings, they came to play. So, the kind of few points that he's making there is, well, first of all, they're making so a very different structure than what other Behemoth have tried. So look, if you've been in crypto for a few years, you'll know that this isn't the first ETF that people have tried to get. There's been, 3, 4 multiple that I can think of in the past that kind of just get brushed to the side, don't really go anywhere. When it's announced that there's an ETF coming, there's a lot of hype, but then it quickly kind of gets, dissolved to an extent because it swiftly gets kind of, no, declined. However, the fact that BlackRock are doing it, and like I said, Deck did cover this on Friday, so go watch the previous episode of Coffee and Crypto, but the fact that BlackRock are doing it with the size of the company that they are and the history that they have and what they've actually proposed in this ETF, it's looking more likely than ever to get approved for, that's one part of it, but there's more reasons which I'll cover in just a second. So the ETF news is, again, some people are seeing all this, and again, I kind of eat into it a little bit myself, but with Gary Gensler and the SEC doing what they've kind of done the past few weeks to scare a lot of retail out of the market and say that there needs to be clarity, there needs to be regulation, there needs to be this, needs to be that, they look like they're shaping up the crypto market to allow the big players to come in. Now, don't get me wrong, an ETF would be great for the market. It would show kind of commitment to the market from the bigger players that could potentially drive more money in. However, it then becomes easier to control because they're going to want to hold a absolute ton of Bitcoin, obviously, which then could control the market because they'll have a large market share, and then it might be harder for the retail investor to get invested unless they go through the likes of an ETF, etc., which isn't really what we wanted. Well, not we as in I helped set up Bitcoin, but it wasn't really what was planned or what was wanted with the Bitcoin network, etc., because you don't want to give the power to the bigger guys. It's not really the point. Anyway, that's what people are seeing is happening, and they're thinking that's why it will get approved, and that's why BlackRock have done it. It's literally come out weeks after all this stuff has come out from Binance, Coinbase, the Ripple kind of stuff as well, June 13th. So June has been a hot month for scaremongering, I guess, and big news on the crypto space. And I think this ETF just kind of is the icing on the cake, personally. But anyway, let's get to the article that I've been talking about. Now, it says here, Bitcoin's ETF success rate with the SEC is 575 to 1. That's insane. So they've successfully got 575 ETFs approved out of 576. Come on. Now, BlackRock's only unsuccessful ETF attempt dates back to almost a decade ago. The world's largest asset manager made a massive step towards its involvement in cryptocurrency industry this week by filing, again, for the Bitcoin ETF. Now, with so many previous applications for such a product by other companies, as I've just mentioned, failing before, the community wondered whether BlackRock's attempt seems doomed from the get-go. However, the behemoth's success rate with the SEC has been rather unmatched so far, almost as if they are paying the SEC or the SEC are benefiting from this. Interesting. So, the subsequent central bank monetary policies and BTC's price surge in 2020 and 2021 changed the game in a way that very few were brave enough to envision prior to that moment. Numerous institutions started looking more seriously towards cryptocurrency industry and Bitcoin in particular. Back then, it was almost expected that a new institution or individual legacy investor will announce their Bitcoin purchase on a weekly basis. The good old days. Who remembers 2021? Now, BlackRock, despite being hesitant at first, started with minor investments through the CME, as well as encouraging comments from some of its executives. While many institutions backed off during the 2022 bear market, quite rightly so, especially in the wake of the loud collapses of the Terra ecosystem and FTX, BlackRock doubled down with a few more initiatives, including a blockchain ETF in Europe. Now, in June 2023, the behemoth made its largest bet on the industry, filing for its Bitcoin spot ETF in the States alongside Coinbase, which will be the custodian for the funds. Interesting. Now, the move had an immediate positive effect on Bitcoin and its price, which jumped by over $2,000 in the first day after the filing. The long-term consequences could be even more beneficial for the entire industry should that ETF be approved. Now, according to this man Eric, who is Bloomberg's senior ETF analyst, the chances are quite high, at least historically speaking. BlackRock has a mind-blowing success rate when it comes to the ETF applications, with 575 approved to just 1 rejected. This is, to me, quite positive. Now, there was one other thing which, again, shout out to Mark. Everyone who is in the Discord will know who Mark is. Mark had texted me late last night. Let me just bring it up here to tell you a bit of a it's a bit of a funny timing. So again, when we talk about crypto and we talk about timing in the market and timing of news and kind of everything that's kind of coming about, especially the past few weeks, but the past few years has shown us that news really does show up at certain times when it really has to. Now, Mark texted me something really interesting last night. Let me just bring it up here. It's on my phone. So the ETF stuff, right? So obviously the ETF stuff is really popping right now. It's a hot topic. It's caused a little bit of a hype around the market. It's not anything we haven't seen before. Like I said, back in 2021, we were getting these all the time from all the big companies announcing they were applying for an ETF but getting knocked back. And it does create a bit of hype because an ETF would mean that a lot of money would flood into the market, which would then mean that much more kind of price rises would be expected across the board. However, as we talk about this 575 ETFs to 1, the SEC apparently here, again, this is shout out to Mark for this, so the SEC can delay decisions up to 240 days from when they file, which would take us to February, right before the halving. So, like, I believe in a lot of timing is key in crypto. The halving is about 300 days away now. So, like I said before, it's going to be about kind of April time next year. That tends to be when you really start to see the bull market start to kick off normally, just because of the supply and demand, and it's a bit of a kind of psychological level and stuff. So you tend to see things start to kind of get active round about there. So the fact that they've timed this now, so they've put in this application, and if they do delay it by 240 days, it takes you to February, which is 2 months before the BTC halving, which everyone knows does cause a bit of, hype in the market. So could they then delay it because they're busy doing other nonsense, then approve it in the February or March of 2024, months ahead of the halving, to just really start getting things going? Now, one thing that I've mentioned many times in the past is that you tend to see a bit of a dump before the halving. Now, could this be not a buy the rumour, sell the news type of event, but a similar type of build-up as to a kind of build-up from now till February? Well, maybe not now, we're a little bit early, but in the winter time, could we start to see a bit more news come out from BlackRock? Just let's release some news in kind of October, November, get a bit more hype back. We released it in June, but let's release it back in the winter when the prices are starting to rise. So let's talk about it. We'll say we've got a meeting with the SEC. They'll say that we're making progress, but they won't be making a decision until February or March. So there'll be a build. So you'll see prices climb, retail investors climb back into the market. Then the ETF will get approved in February, March, whatever it may be. Again, a month or two ahead of the halving, we'll see a dump when it gets approved, because it's what always happens. Then people will, again, run from the market. The prices will decline, giving all the big dogs and BlackRock time to buy into Bitcoin, because the prices have just shot down because everyone's starting to sell their Bitcoin, when in fact all the big players are doing is selling it. So the price crashes, you, the retail investor, get scared, sell your assets. The big dogs go, perfect, plan worked, let's buy back. The market then pumps. We then get the halving, it's all successful, there's more news coming out, the prices start to run up, retail investors jump back in because of FOMO, and so on and so forth. You see where I'm going here. So, look, speculative, but it's not anything that I haven't seen before or experienced before with retail investors and institutions and big names getting into crypto. They want to buy your crypto for the cheapest price possible. How do they do that? They scare you out the market. Anyway, I hope you liked that little kind of thought process that's going on up here. We'll check in on this. I mean, it's going to be big hot topic news for a while, so we'll check back in on this over the next few months. But let's just see how it plays out. We'll come back in November and we'll maybe replay this video. Or we'll come back in February and we'll replay this part in the video. And let's see how it plays out. Because I don't know, it just seemed when Mark texted that last night, I was just thinking that just seems a bit too convenient timing for me. And look, don't get me wrong, I could just be kind of tinfoil hat thinking a little bit too much, but it just seemed a little bit too good to be true. So yeah. Anyway, on that note, there's one last tweet I wanted to show you before we finish up for the day. If it will load. There we go. So I quite like this tweet. So it says, bull markets are born on pessimism, grown on skepticism, and mature on optimism, and die on euphoria. Now, the time of maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell. So that's, I mean, pretty straightforward stuff, pretty standard stuff, but I just liked how it was kind of laid out. And bull markets are based on pessimism, where people don't think it's happening, it's not real, the prices are low, it's not great. Essentially bear markets, basically. So what he's saying there is best time to buy. Again, no financial advice from me. I'm simply breaking down a tweet from this man, Kevin. So what he's saying here is best time to buy is essentially bear markets, when prices are low and no one really believes it's doing anything. and the best time to sell is when everyone's full of optimism, it's going to the moon, it's euphoria. That's probably a good time to get out in the market, which again, something that we've covered with members many times in the past, and actually on this channel many times in the past as well. But yeah, I thought I'd just kind of leave you on that before we finish up. But yeah, quite an interesting kind of view on the bull markets and bear markets. Anyway, like I said, that was the last tweet I wanted to show you for today's episode. That's all for us today. We have a one-to-one consultation kicking off in 20 minutes time. Again, remember, we are a big YouTube presence, but we're also fundamentally a consultancy in the background where we work daily with clients on a one-to-one basis, whether it's in person or over the phone, and do consultations regarding your crypto journey, portfolio, and all that good stuff. So if it's something that you didn't know that we did and you'd be interested, there is a link below for our website. Go check it out, read a little bit more about what we do other than coffee and crypto and YouTube videos. We do, again, like I said, a consultancy business, which we've had for over 3 years now. And of course, you can see on your screen now our very well-known certified crypto Discord community. So go check that out. Everything's linked in today's description. I need to go now, get prepped for the client coming in for the one-to-one. Grab another coffee, I think, because that flat white was not cutting it this morning. And yeah, thank you so much for tuning in. If you haven't already, please like today's video, subscribe to the channel, and share it with someone who hasn't seen a coffee and crypto episode who might benefit from it. But that's all for me. I will see you all again tomorrow for another episode of Coffee and Crypto. My name's Don. See you soon. Bye-bye.